Now, it's no secret that YieldMax has a ton of different ETFs, and they're constantly coming out with more and more every single month. But there's a specific type of ETF that many investors love, and that is going to be their weekly ETFs. And in today's video, we're going to be ranking all 9 of YieldMax's ETFs, which is going to be YMAX, YMAG, LFGY, ULTY, GPTY, CHPY, SDTY, RDTY, and QDTY. So it's a total of 9 weekly paying ETFs. So they have a pretty good variety to choose from to meet your investing and income needs. Now we're going to start with, of course, the tried and true ETF, YMAX, which has a fairly good distribution rate of around 60%, paying out weekly, and it basically is a fund of funds. So it's going to include all of these single stock ticker covered call ETFs, so you're fairly diversified if you choose to invest this route. I'm going to be honest, I'm not a huge fan of some of these ETFs that are in this list. I'm not a huge fan of Tesla or Carvana, the Carvana option income ETF. So there's a lot of them that are in here that many people are not really a fan of, even MRNY, which is at around $2 a share, very cheap and constantly going down. So that is something you have to be mindful of when investing in YMAX. And if we take a look at the all-time chart, we can see it's actually down almost 33%, which is pretty significant to a lot of people. But we do have to keep in mind it does have a fairly decent distribution rate. So we have to take into account those distributions. And of course, weekly paying. And while the dividend amount every single week is not too consistent, we can generally expect to be between 10 and 20 cents every single week. And if we take a look at the total return with dividends reinvested, you're looking at about 7 to 8% total return. This is with inflation and adjusted. So without inflation invested, you're going to have a 10% year-to-date return since January to now, as well as a total return of 39% since inception. Now that is pretty good considering that the share price of YMAX is down 33%. And that is something that a lot of people who are not income-focused investors do not realize, that you have to factor in all of those dividends or distributions. But I'm a big fan of YMAX. I'm holding quite a few hundred shares of the ETF, and it's been paying me out very nicely with a positive total return. So I'm going to be placing YMAX in the S tier. It's very diversified, one of the most diversified ETFs they have in their lineup, pays out weekly, and pays out a very high distribution rate because of that. Now next we're going to go into YMAG, which is going to be similar to YMAX, but it's only going to be holding 7 of their ETFs, which is the Magnificent 7, right in the name, fund of option income ETFs. It's going to have Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. And very similar to YMAX, it is down all time about 24%. So while it is not as down as YMAX, I really am more of a fan of YMAX. And even though it has a pretty decent distribution rate, it really does not have that great of a recovery that I was expecting from Liberation Day, April 1st. And it only has about 7 holdings. So if you're not a huge fan of the Magnificent 7 and some of these ETFs inside of this ETF aren't really my favorite, I'm not going to be holding Tesla, Apple, AMZ in my own portfolio, same as MSFO. The one that I really like in this portfolio is really just going to be NVDY. So instead of buying the YMAG Magnificent 7, I would just own NVDY itself on its own. And year-to-date total return, it's about 4.61%. So it's about half as YMAX. But something we also have to consider is because it hasn't dropped in share price as much as YMAX, it's up 42% total return. But as I mentioned earlier, I'd rather just own NVDY on its own instead of this ETF. But we can't ignore that it has a pretty good total return. And for that reason, I'm going to be placing that in the A tier. Very decent ETF, not my favorite, but we can't ignore the returns it has been giving us. Now, next up, we have LFGY. And if you're not familiar with LFGY, it is their crypto portfolio option income ETF. And it actually has one of the second highest weekly paying distribution rates consistently next to ULTY, currently around 67%. And if we take a look at LFGY's holdings, it has about 80 holdings, which is going to include some of the options trading that they're doing inside of this ETF. And we can see they do have a very good diversified portfolio of crypto as well as crypto related companies. We have the iShares Bitcoin Trust ETF, IBIT, making up 10% of the portfolio. So you're getting a lot of Bitcoin exposure as well as MicroStrategy exposure. It owns 8.67% of MSTR. You're getting exposure to the Coinbase. You're also getting exposure to Robinhood, which has been huge in the crypto space as of lately. And you have a bunch of other crypto related companies, as well as some Ethereum making up 4%. Now, because it does have a lot of volatile holdings, they do use that hedging strategy that they use in ULTY, where they actually sell, or rather buy, put options on the underlyings to prevent any downside exposure. And that's why there's going to be a total of 83 holdings. Not only are they selling options on their holdings, but they're going to be buying put options as well. And it's a strategy that has worked well for ULTY. And I think if going forward, we're going to be seeing a lot more ETFs use that strategy. Now, if we take a look at the all-time chart, it looks pretty ugly at negative 30%. It started around $50 per share and dropped significantly during Liberation Day, but it has done a pretty decent job of recovering, and it does pay out one of the highest distribution rates. But February to April was not a good time in the market, so it did not have that great of an opening. But I do believe that with a diversified portfolio and using those hedging strategies that ULTY has seen and proven to work, I do think that this would be my third or second pick for a weekly income ETF from YieldMax. And for that reason, I'm going to be placing LFGY in the S tier as well. Now, we could probably get rid of the bottom two tiers since we only have 9 ETFs we're covering today, but I'm just going to leave them in. And next, of course, we have ULTY. And if you're not familiar with ULTY, you've probably been sleeping under a rock. It's been all the craze lately. People are pouring tons of money. It's almost reaching 3 billion assets under management, which is absolutely insane. It's YieldMax's second biggest ETF, just under MSTY, which has lost a lot of steam as of lately. And you already know we're placing ULTY in S tier. But if you're not familiar with ULTY, it looks pretty ugly from the all-time chart. Down 70%, absolutely ridiculous. No one liked this fund, but they they completely redid the strategy. They changed it from monthly to weekly. A lot of people love those weekly ETFs, and I think we're going to see a lot more of them from many platforms. But basically from the strategy change, they now own the underlying holdings. It's no longer synthetic covered calls, as well as that hedging strategy I mentioned earlier with buying put options. In return of sacrificing some distribution rate, you're going to have downside protection with those put options, which is something that people really love, as many of these underlyings can be very volatile because this ETF chooses the most volatile stocks out there that they believe are bullish in order to capture the most option premium by selling call options. And if we take a look at the total return year to date, it's actually up 14.57%. And if we take a look year to date share price, it's down negative 32%. So we can see how a lot of these income ETFs, even though they lose money in the share price, you're still making way more money if you're reinvesting those distributions. And we can see all time, it's up 15.18%. Absolutely amazing, especially since that is factoring in some of this ETF before the strategy change. Down 70% share price, but up 15% total return. That's a win in my book. And as we mentioned earlier, huge assets under management. It's constantly growing. has tons of volume, which is very good, meaning you're going to have a very tight bid-ask spread so you can get that desired price and get your limit buys filled quickly. Now I just realized we forgot to go over the total return for LFGY, so let's show that real quick. Total return year to date, it's down 1.5%. Not a big deal, but that is something to take in mind that it has had a rough start. But we do want to focus on the distribution rate as of lately. It has a 65% distribution rate, which is the second highest weekly paying ETF. ULTY has an 85% distribution rate. Of course, it's a clear winner in this space. Now, this is not going to occur forever. We don't know how long these are going to last. But for now, ULTY is number 1, LFGY number 2, and of course, YMAX at 60%, number 3. And next, we're going to be going over GPTY. And for those not familiar, it's the AI and Tech Portfolio Option Income ETF. It's going to offer a little bit lower of a distribution rate, around 30%. And it's basically, as the name implies, going to invest in AI and tech companies. And I know a lot of people are a huge fan of this ETF. It does have a little bit more stable of a NAV, but it does have a lower distribution rate. So a lot of people avoid it for that reason. When you take a look at the holdings, we're going to see a lot of AI up-and-coming ETFs, AI up-and-coming companies. Of course, we need those semiconductors from NVIDIA. We have Palantir, which has a ton of government contracts. Can't forget C3 AI. Meta has been a big player in the space. And we have a ton of other companies in this ETF. So I think this has a lot of good growth potential. The holdings are not going to generate as much income as the crypto ones currently. But I'm a huge fan of this ETF as well. And I really like these portfolio ETFs. They actually hold the underlyings rather than just synthetic covered calls. As well as they are diversified. You're not going to have just one company, but you do have a lot of sector risk as they are very concentrated, whether it be crypto or AI. So we can see year to date, it's up 10%. And that is actually going to be the total return. It's only been out for a few months now, but I know a lot of people enjoy it. And it's done really well in terms of share price recovery because the AI space has been booming. But for weekly distributions, it's a little bit on the lower side. You're going to have about 35% distribution rate. It's a really good ETF, and I know a lot of people will like it. But in my opinion, I'm just going to be placing it in the A tier. Really good, but I would prefer these three instead up here. Now we have the last portfolio ETF by YieldMax, CHPY, which is going to be the Semiconductor Portfolio Option Income ETF, and it's going to have a distribution rate of 40%. If we take a look at the all-time chart, it's up 12%. But we do have to factor in that this ETF came out after Liberation Day, so you're just seeing the full recovery of the ETF, and that's something you have to keep in mind, because many of these other ETFs on this list have been released before Liberation Day, which was a huge drop in the market, and then afterwards many stocks recovered really well. But if we take a look at the holdings, you're going to have, of course, many names in the semiconductor space. NVIDIA and Broadcom are going to make up some of the largest weightings in this portfolio, and we're going to have some pretty good weights for Qualcomm and AMD. So in my opinion, this is a pretty decent ETF. It's going to have a lot of companies you're going to see in the AI and tech company ETF, GPTY. And in my opinion, I would rather buy GPTY because not only are you going to get those semiconductors which are used to power the AI technology, but you're going to get the AI companies itself like Palantir, which I really like. Checking out the total returns, of course, is going to be biased. 32% total returns. Just because it came out right after Liberation Day, we've seen the huge bull rally. So don't let this confuse you that it's going to continue forever. It's definitely a good ETF. I think it's very diversified as well. But I'm going to be placing it next to GPTY and A tier. I would rather own GPTY, but I do think that CHPY CHPY is a great alternative. Next, we're getting into the last three, which are going to be the 0 days to expiry ETFs. SDTY is going to be the S&P 500, RDTY is going to be the Russell 2000, and QDTY is going to be the NASDAQ 100. And these are to rival the round hill ETFs, XDT, QDT, RDTY, which have done really well, and a lot of people love the stability of those ETFs. Now, SDTY is going to be very similar to, of course, the round hill equivalent, which is going to be XDTE. But the thing is, SDTY does have a lower distribution rate, so it does have a lower performance than the round hill equivalent. And there's nothing really special with this ETF. It just sells 0 days to expiry options and then distributes that income to investors as distributions. So all three of these are going to have the same strategy. It's just going to be the different indices that they're using. But I'm going to be placing them all in the B tier. I do like the round hill equivalents a bit better. Higher distribution rates. This YieldMax was pretty much just doing a copycat for them because of the popularity. And if we take a look at the total returns, we can see that they've been okay. RDTY has been pretty good at 5% year to date. But if we do the total return, SDTY is up 6.56%. QDTY is up almost 9%. RDTY is 5.49%. Now, if I had to choose one of these 0 days to expiry covered call strategy ETFs, I would probably either choose SDTY or QDTY. I'm not a huge fan of the Russell 2000 as an index, but I'm a huge fan of the S&P 500 as well as the NASDAQ. I would have to choose QDTY. It does have the highest total return at around 9%. And then my second pick would be SDTY, with RDTY coming in last for their ETF lineup. And we can see these 0 day to expiry covered call ETFs have some of the lowest distribution rates in their weekly ETF lineup. And that is why we're placing them in the bottom three. Now, if we rearrange these, ULTY, of course, would be the number one pick. Then I would probably pick YMAX and then LFGY. And then for the A tier, I would choose GPTY over YMAG and YMAG over CHPY. And then SDTY for the B tier. Next would be QDTY with RDTY, as mentioned earlier, coming in last place. Now let me know in the comments if you agree with this list for the 9 weekly ETFs by YieldMax. Which ones are your favorites? And let me know what, in general, your favorite weekly ETFs are, not only by YieldMax, but they could be by Roundhill, Rex Shares, Granite Shares, which their yield boost lineup. There's a ton of them out there, almost 50 now.